The Layah Heilpern Show. BitMEX, the OG crypto derivatives platform and the best place to buy your Bitcoin.
Things really are just starting to heat up.
Hey guys, and welcome back to the Layah Heilpern Show. I am very excited for this conversation today. We have so much to get through. Obviously, we're talking all about Bitcoin. Now, before I kick this show off, I do want to say a massive thank you to our sponsors, BitMEX, because as always, without them, we wouldn't be able to bring you such important content. So a quick message from BitMEX before we bring our guest on. So BitMEX is the OG crypto derivatives exchange and now has a spot exchange for you to buy and sell your crypto. Especially in a bear market, you need a name that you can trust, and BitMEX sets the standard for reliability, performance, and transparency. It has proven itself through multiple market cycles, and that is very important because it has stood the test of time. We're seeing a lot of companies right now go under, so you need a company that you can trust. Right now, BitMEX is actually celebrating the start of BitMEX Spot with $1 million in USD as a prize. So all you have to do to enter, users just need to trade the crypto equivalent of $250 US, which means, you know, you could purchase some Bitcoin. You could purchase around $250 in Bitcoin. Now seems like a great time. And yeah, you can actually enter up to 25 times to win. And one lucky winner could actually get $500,000 in Bitcoin. So I'm going to leave all the information for you in the description below. If you are watching on YouTube, then you'll just see it all in the description below. BitMEX is a great place. So a huge thank you to them, especially because we talk about a lot of controversial things on this show. And that's what we're going to get into. Now, before I bring on my guest, please, if you are watching on YouTube, don't forget to hit the subscribe button so you never miss a video, and also hit the like button so you can support this channel. All right, guys, let's do this. So joining me today is the co-founder of Looking Glass. It is Greg Foss. Greg, welcome to the show. How are you?
What a great time to be here. Thank you so much for having me.
Yeah, it's great to see you. We met a couple of weeks ago at the conference. So before, we delve into this, for those who don't know you, can you just give us your background?
Certainly. Yeah, it was great to meet you at Bitcoin Miami. I am a 35-year veteran of credit trading. I earned my stripes in the junk bond market, starting on the sell side of the street. I worked for a Canadian broker-dealer, and then I moved to the hedge fund community and lived the great financial crisis in the hedge fund community. I've experienced 4 substantial financial crises in my life. Started with the Latin American debt crisis in 1988, and second crisis was long-term capital management. The third crisis was the great financial crisis, 2008, and then the COVID crisis. So I think I have some, let's call them war scars, and what I bring to the table, I like to say, is 35 years of mistakes, but I'm still alive. I'm fighting the good fight because you got to learn how to manage your risk, and that's what I like to think I am. I'm a credit risk manager or a risk manager.
I'm so excited to speak to you. Four crises. I can't even say that word. 4 crises. It's going to be pretty crazy. The COVID crisis, 2008, and everything else that you mentioned. But before, we delve into this, I am interested to know how you first got into Bitcoin.
Well, it's sort of a neat, it was a long process. So I'm a Canadian, but I completed 2 years of university in the United States. I got my MBA at an Ivy League school called Cornell University. And while I had the chance to work on Wall Street, I decided I wanted to come back to Canada. And I ended up working for Canada's largest financial institution in 1988. And I was working directly for the CFO. It was a special projects group. And I like to think of myself as an engineer, a financial engineer, but I did train in undergrad as an engineer. So I was in a restructuring group in the Royal Bank of Canada. And one of my projects, the first projects, was working on the Latin American debt restructuring. Royal Bank of Canada was very similar to other global banks. They had lent way too much money to lesser developed countries, LDC countries, of which South America made up a huge component of that. And in 1988, U.S. Treasury Secretary Nicholas Brady proposed a plan to the global banking system to restructure the debt of Mexico. It was the first plan that turned out to be the first of many. And I was assigned the task of evaluating the Brady plan options. And, I did a quick back of the envelope mathematical calculation, and I realized that the Royal Bank of Canada was technically insolvent, which is to say the book value of equity of the Royal Bank of Canada was vaporized if the Latin American debt portfolio was marked to market. Now, you'd think that the financial analysts on Wall Street and Bay Street would have figured this out pretty quickly, but they didn't. So, I go in to see the CFO. His name was Emil, great guy. And I go, Emil, we have a problem. And he said, I know, don't tell anybody. Now,
wow.
as the largest financial institution in Canada, this was mind-blowing to me. Firstly, that the analysts didn't understand what was going on. Secondly, every equity shareholder of Royal Bank of Canada certainly had no idea what was going on. And most importantly, I wasn't allowed to tell anybody. Now, not that I would have, because, I'm a 25-year-old kid. What do? Run out to the Wall Street Journal and tell them that the global banking system is insolvent? Clearly, there was a problem, because that's why Treasury Secretary Nicholas Brady proposed the restructuring plan. The point is, over a 25-year period of dealing with these restructurings, I have been exposed to what I call the Fiat Ponzi. Okay. Now, the Fiat Ponzi
before you explain the Fiat Ponzi, are you able just to speak a bit closer into your mic, because the background noise is coming through quite loud?
I'm so sorry.
And I don't want people to miss this.
Okay, so I am in an airport, so I apologize. So
they think you're doing the dishes, Greg. They think you're doing the dishes. That's what I'm getting in the comments. Come a little bit closer.
Okay, is that better now?
A little bit. It's better when you come closer. When you come closer,
you know what? I might be on the wrong mic then. I think I'm on the wrong mic. It should be going through my headphones. Give me one sec to make sure. No. Okay, hold on one sec.
No worries. All right, we're gonna get Greg's mic switched.
This is settings. Okay.
No worries. All right, so we're gonna get Greg's mic switched, and then we're gonna find out about the Fiat Ponzi, which I think is pretty important actually, because a lot of people right now, given Bitcoin's prices down, are talking a lot about how Bitcoin is a Ponzi scheme, which obviously we know isn't true. But they fail to hear how the fiat system is a Ponzi scheme. So I'm really excited to get into this.
I'm testing.
Are you able to switch it?
Is that better? No.
Can you count to 10 for us?
10, 9, 8, 7.
It's okay. We can just still hear you. But if you just speak louder, then hopefully you can overcome it.
Okay, give me one more sec.
All right.
I'm going to try one more.
Guys, this is what happens when you do it live. This is.
Sorry. Is that
that's better. Yes.
Okay, let's go with that. Okay.
But yeah, keep it close if you can.
Okay, so basically, the problem with the Fiat Ponzi starts with the commercial banking system. And the reason that's a problem is because commercial banks are 25 times levered to their capital base, which is to say that for every $100 of loans a bank makes, only $4 to $6 is equity capital or risk absorbing capital, and the other $94 to $96 is your depositor's money or subordinated debt. So how often do you think a bank makes a loan and the value of that loan declines by more than $6? Well, it happens all the time. Okay, if you've ever traded debt, which I've done for 35 years, you know that the prices of bonds fall by far more than $6 over the economic cycle, whether it's because of credit risk, primarily because of credit risk, or it's because of changing interest expectations on behalf of the central banks globally. Bond prices are volatile. Very simply, Layah, commercial banks need inflation in order for their collateral to increase in value to compensate for their undercapitalization. That is the Fiat Ponzi in a nutshell. After 35 years, I finally found Bitcoin. Bitcoin is the only digital asset that solves the Fiat Ponzi. Very simple.
The thing which blows my mind is the fact that, from your perspective, these people know that it's a Ponzi, right? Like you were told not to say anything.
And by the way, there was nothing coercive there. It was a bit of a, tongue in cheek. Yes, this is the commercial banking system. But the reality is Henry Ford said the same thing about over 100 years ago, right? He was quoted as saying, if the average American understood how the commercial banking system works, there'd be a revolution in the morning. So, you know, it's a fact of the structure of the fiat system where you have commercial banks that need to have an incredible amount of leverage to earn proper returns for their equity holders. It's just, it basically puts the system at risk of cyclical failure. And notice that the first one, 1988, was followed 10 years later. 1998 was followed 10 years later. 2008 was followed 10 years later. 2020. Okay. The depths of these crises get more severe because the central banks bail out the system and kick the can down the road. And consequently, we are in a spiral, a DEBT spiral that can never be repaid, and thus currency debasing is 100% certain.
Would it be fair to say that you believe it's destruction by design?
I can't go that far out on the limb. It's designed this way because it's always been designed this way until there's an alternative. And that's why I'm so excited about the building a parallel network that's built on different foundations totally.
And you mentioned that 10-year cycle, and then we get to obviously COVID in 2020. So that's one of the crises which you mentioned. How is that comparable to the other previous financial crises? You know, like one's financial, one's medical. So can you explain the connection?
Well, yeah, okay, for sure. I guess what I should have said, it was a financial crisis in the response by the central bank. So, for example, what happened in 2020 that never happened before was that the Federal Reserve said they would buy high yield bonds. Okay. That was the first ever in history that the Fed came out and said they would buy high yield bonds. Why did they say that? Very simply because there were 4 different US based credits. They are General Electric, General Motors, Ford, and AT&T that were on the cusp of being downgraded from investment grade, a subjective investment guideline for bondholders, from investment grade to high yield. The combined debt of those 4 companies is bigger than the existing high yield market as a whole. So if they had been downgraded into the high yield market and caused forced selling by the investment grade sellers that have to sell their bonds into a high yield market, it would have overwhelmed the high yield market to the extent that it would have caused a collapse of the equity market, because the bond guys rank as a prior claim in the capital structure. Well, guess what guys like me do when you own a bunch of General Electric debt that is becoming more credit risky? You go out and you short the common stock. So you see how the cascade effect works through the system. And therefore, the 2020, although it was a response, as you mentioned, to a medical crisis, the financial crisis was more of the same. Get involved, print money, try and contain the contagion, because as high yield goes, so goes equity markets. So what the Fed was actually trying to do was control volatility by backstopping the high yield market. Okay. And it worked to an extent. It regained confidence. That's all it's about, is the confidence, the liquidity of the system. They don't care so much what the price is, as long as it still moves, meaning it trades. What really happens in every crisis is things gum up. There's no trading, there's no liquidity. Things fall by literally 20 points, 20 bond points, which is a 20% drop in the price of a bond. Let me tell you, that's not supposed to happen. But bringing it right back to the banking system, if a bond drops by 20 points, the same thing happens with the loan. Okay, the two things are pari passu, meaning they rank exactly the same in the credit structure for an investment grade bond. If General Electric debt fell by 20 points, so did the bank loan. And imagine what happens with the bank loan. That means all the banks that only have $6 of capital, they just lost $20. What does that mean? It means that the financial system is insolvent again. Hence the Fed backstop. I hope I didn't lose too many viewers here, but you see how it's all contained within the leverage structure of the banking system.
Yeah, no, I appreciate you, taking the time to explain that. No, the viewers are going up. It's all good. We're good.
Okay.
This is valuable knowledge. It's good to know. So what you're talking about, in my opinion, is it's like very specific kind of knowledge that not a lot of people, have. It's more than being financially literate. And so that's what you do, right? You educate
Well,
people. You promote
I
financial
try.
literacy.
Yeah, well,
You
when I
try
sat in
to.
that chair, yeah, when I sat in that risk chair, there's
Yeah.
nothing like learning by trial by fire. Let's put it that way. You can study all the financial textbooks you want, and they'll talk about things like efficient market theory and whatever. Let me tell you, when the world is melting down, there is no efficient markets. There's like, get me out. I need to raise money for my unit holders because I'm being margin called. I need to hit a bid. I need to hit some sort of liquidity bid. And so you throw in a liquidity bid that's like 20 points below where the last bond traded. And guess what? You own them. And you're like, oh my God, I own these bonds down 20 points. That means all the other bonds that trade in that same industry need to be marked down in lockstep because the credit risk of the industry trades as a contagion type of analysis. So look, all I will say is sitting in a risk chair is a very important education. And I did that for 30 years. And that's the biggest problem I have with Chairman Powell. He is a lawyer. He has never sat in a risk chair. He's never felt, well, I have expressions and I won't use them on your show that the tightening of certain body parts that indicate sitting in a wrist chair, that you certainly don't experience living in a classroom. You need to be in that chair understanding when the market stops working and why it's so dangerous.
Yeah, but you're the co-founder of Looking Glass, which basically looks to inspire financial literacy, teach financial literacy, right?
Now that's a free platform, and that's because I wrote an article. The genesis of that was I wrote an article that basically detailed my 30-year history in the credit markets, and it was submitted to Bitcoin Magazine, and it was quite well received. And what happened though, there were a lot of readers that are like, "Oh my God, I needed to open up a Google Doc to
Yeah.
see what Foss was talking about the whole time," because I believe every single credit manager in the world needs to own Bitcoin as insurance on the credit portfolio, meaning on the Fiat Ponzi. Okay, so I wrote those thoughts in an article. That's one of the reasons I got invited to speak at the first Bitcoin Miami conference, and it was well received. But it was written, and I wrote it on purpose for portfolio managers, credit portfolio managers,
Mm.
who are a weird bunch. Okay, we're a bunch of square pegs in a round hole a lot of times, but at the end of the day, they said, "Can you write it in layman's language?" And I partnered with the group at Looking Glass Education to do that. We did the first article. Again, it was quite well received. And we said, well, why don't we do this on a regular basis? So really now I'm very proud to be part of it, but I am not the one running it. It's two young
Mm.
men, one from Australia. His name is Daz Bay, or B, and he's a great kid, younger than me, so he's a kid. And then another one from Whistler, British Columbia, who's a New Zealand expat who lives here in Whistler. That's where I just got back from. And the two of them are running this education platform that I'm very proud of. It's being translated into 8 different languages, and it's being used in El Salvador as the
Oh, wow.
education platform in El Salvador. Okay. So lots of really good stuff happening. We just got back from Madeira, for example, and they're going to translate it into Portuguese and use it in the Madeiran educational system, etc. So yeah, I'm a co-founder, I guess, but let me be very clear. I don't write specifically for that anymore, but the kids, and when I say kids, one's in his 30s and one's in his 20s, they're
Okay.
doing an amazing, amazing job of this. And I'm very proud to, have been part of that for sure.
Well, let's talk about financial literacy because they don't talk about that in schools. Everything that we've just mentioned, and I know you said it was only from experience that you really understood about this fiat death spiral.
Correct.
But why isn't it taught in schools? And
Okay,
also,
so great question.
okay, we'll go there.
We'll hit that question
Yeah.
first. Because if they taught you that the fiat Ponzi existed, no one would deposit their money in the commercial banks, would they? They'd be like, okay, I'm teaching all these kids through university that they shouldn't trust the financial system. Oh my goodness, that destroys the fiat system itself. So they can't teach you. And the places that we're seeing it catch on right now are parts of the world that are non G7. right? It's, you know, it's the G7 countries that run the world. They run the education system in the G7 countries, but you're seeing it actually catch on in the less privileged countries of the world where reality can be taught, but you can't learn this in Britain. All right. As soon as they taught you this in Britain, your famous bank street would go out of business. Okay. So, you know, it makes sure that we know what the incentives are to teach the truth. And by the way, I went through 6 years of university, so 4 years of engineering and 2 years of finance a business school in the USA. And trust me, they absolutely don't teach you this. Why? Well, because it would mean that people would question the viability and the sustainability of the current financial system.
So let's bring Bitcoin into this. How does Bitcoin solve everything that you've mentioned?
In a nutshell, from my perspective, I believe Bitcoin to be credit insurance. I believe it to be essentially the equivalent of a credit default swap. Now, I don't want to get too granular with your listeners, but it's effectively purchasing insurance on a basket of fiat currencies. And I can value that using credit default swaps on sovereign nations. This is the gist of my thesis that Bitcoin should be thought of as credit insurance. Now, Wall Street has not agreed with that yet. They've decided they're going to trade it like a risk asset, and all the algos in New York are going to trade it in correlation to the S&P and the NASDAQ. But over time, as big money becomes smarter, and it takes time for big money to be smart. Most big money is stupid as a post, okay? Including lots of Canadian pension funds that, for example, just off the, on the topic, one large Canadian pension fund that invested in Celsius Network, seed capital round, or Series B before Bitcoin. This is the mark of a very foolish asset manager. But the reality is they exist all over the world, these types of asset managers who do traditional things and don't study things that hard. They're staffed by, some old fat white guys like me. And at the end of the day, they are lazy. They're intellectually lazy. So it takes time to teach the world new tricks. And I believe it'll happen. But right now I believe that Bitcoin should be inversely correlated to risk markets, meaning as equity markets are tanking, Bitcoin should actually have a bigger bid because it's insurance. It's like fire insurance. And right now the fire is on our back porch. And the price of fire insurance has actually gone down. It's a beautiful thing. Doesn't make sense, but not all markets make sense.
So what is it about Bitcoin's properties that make it insurance?
Again, it's the anti-fiat, okay? So it is essentially credit protection on the default of a country. And that's exactly what it is. Now, there's various risk natures of countries around the world, but you would agree with me that Argentina defaulting for the 5th time in my career is not a really good track record. Well, people who live in Argentina should own insurance against that regularly scheduled event in Argentina. People in Turkey should feel the same way. But believe it or not, there is a credit default swap market on the United States of America, which indicates there's people that are betting on the possibility of a default of the U.S. Treasury. Now, that is not as high likelihood, but it's not a 0% likelihood either. And the value of that credit insurance requires that you have a counterparty. Well, the beautiful thing about Bitcoin is there's no counterparty risk and there is no time decay. Bitcoin is actually the perfect insurance contract because, for example, when I lived the great financial crisis and I was short, for example, owned protection on the default of a company like Lehman Brothers. Now, I never owned Lehman, but just imagine I owned protection on Lehman and I owned it by Bear Stearns. And all of a sudden, Bear Stearns is going down just like Lehman. Then I have to run out and buy protection on Bear Stearns, which was really my protection on Lehman. You see how everything cascades down and down and down. So the beautiful thing about Bitcoin is an instrument that, in my opinion, is the perfect financial option to protect against the contagion in global financial markets, including country defaults.
It's good saying this, and I do agree, on a long-term sort of like a macro perspective. But right now, Bitcoin's down and, inflation is up and, everything that could go wrong seems to be going wrong. Cost of living, everything. And unfortunately, people look to Bitcoin as that hedge against inflation. And apparently, it hasn't really performed for them right now. So what would you say to these people, who say, really, how can it be, this insurance, this hedge, if this is the current state?
So again, for me, it's not a hedge on inflation as much as a hedge on global calamity. But people use
Yes.
the analogy that it's digital gold, and therefore they think that it has to be an inflation hedge. Look, what Bitcoin is over the long term will be a non-correlated. What's beautiful in financial management, a non-correlated asset. And people say, well, why is that the case? And very simply, there is the one certainty because of the global debt spiral that fiat.
Oh, I think you've cut out. I don't know if it's me or if it's you. Can you guys let me know in the comments whether it's me or whether it's Greg that's cut out?
Are we back though?
Yeah.
Okay,
did
sorry.
you cut out?
No,
Was
I
it
cut
you?
out as well. I'm not sure if it was me or.
I think you're gone again, Greg. Let's have, guys, can you let me know in the comments if it's me or Greg that's cut out? Because I'm not sure. It's Greg? Okay. All right. Greg, it's you. Can you get better Wi-Fi for us?
Give me one sec.
Okay. All right. Let's see what we can do. All right. Thanks, guys. Let's see. I think Greg is changing his Wi-Fi. All right. You're back. How are we doing?
I'm not sure. You guys tell me.
I can hear you. I can hear you.
Yeah. Okay. So here, I apologize for this. This is the crappy
okay.
Canadian Wi-Fi in an airport. But
No worries. Go on.
again, the only thing that's 100% certain in my analysis, Layah, is that fiat currencies will continue to debase on an accelerated basis. For that reason, you need to own protection against that. Now, you could argue, is it an inflationary expectation? Well, the truth is, even in a deflationary environment, fiat currencies will continue to debase. So I don't care whether it's inflation or deflation. It's protection against the certainty of fiat debasement. That's a very, very important context because every single fixed income instrument in the world is a fiat contract. So essentially, you own a contract that is guaranteed to debase in value. Wow. Given that global debt is the largest financial asset out there, it's a certainty that that financial asset will continue to debase over time. It blows my mind that people haven't done the math, but clearly a lot of people have not done the math.
Yeah, I mean, I'm not surprised because, people are, inspired
lazy.
to.
Say it. No, say they are lazy.
No,
They
I
are
don't think they're
intellectually
lazy.
Well,
No, I
fund
don't.
managers are. Fund managers are.
I think the average person is inspired and encouraged to talk about other things, like race and gender and sexuality and all these kind of like really irrelevant things just really distract from the important stuff, like the fact that the money in your pocket is losing value.
Okay,
That's the way I
that's
look
fair.
at it.
Okay, that's true because not everybody can be a financial engineer, but not everyone can be a social scientist. Not everyone can be an artist or whatnot. But I guess at the end of the day, the biggest problem I have with this is that all of us have children or will likely have children. We are pulling forward gains at the expense of our children. We are not paying our current debts, and our children will be the ones to bear that price. And I don't feel great about that.
Do you have like a time frame for, when you sort of see actually a better question would be, we can get to a time frame. A better question would be what kind of shift do you see happening? Like when, what is Bitcoin's role? You talk about this debt and the death spiral. Like when do things change? When do we see absolute collapse?
One of the things about Bitcoin or about trading in financial markets, and we just cut out, hopefully I'm back. One of the things you never make you can make a price prediction, but not a time. Okay. So over time, I know what price I believe Bitcoin goes to, but I can't tell you when, or it would be foolish for me to predict an exact time. All I do know is these 10-year cycles are getting more severe and they're getting compressed, more compressed. So I would say, knock on wood, I hope I live for the next 20 years. I believe it will be within my lifetime. Thank you for that. I believe it'll be within my lifetime. I have talked about a price target I have, and it's a very rational price target in my opinion, which is over $2 million US per Bitcoin in today's dollars. Is it 100% certainty? Not in the slightest, but the market is currently pricing it at such a low probability that I have the correct price target that I'm like, hey, ship it in. I think my odds are way better than the odds that the market is giving me for that potential outcome to come true.
It's interesting. So these 10-year cycles, these different crises, they are, you said, becoming worse and closer together. So rather than waiting for 2030, you think like 2025, there's going to be another kind of difficulty going on. Sorry to ask, but yeah.
Yeah, yes, I do. I think it's a high likelihood, but I can't say for sure. But the smart money would say yes, there is.
Okay. And so how does Bitcoin fix that though? Like from a practical standpoint, because right now it's still correlated, and I know you said Wall Street or whatever
Correct.
are trading it like a traditional stock, but right now it is still correlated, and it's been correlated for
You're
a while.
absolutely right. Yeah.
So when does this
The biggest
decoupling happen?
research. Well, here I can't tell you, but again, it
Okay.
starts with research like the research that was done by Fidelity. Now, Fidelity is a top 5 global asset manager. Imagine if you're the other 4 asset managers that compete with Fidelity within the top 5, and they offer a Bitcoin silo, and the other 4 don't. Well, any large asset allocator has relationships with all 4 of those all 5 of the top 5. It's not hard for them to switch if they say, hey, well, I want to get this allocation with Fidelity, and you guys aren't offering that. I'm going to switch all of my assets to Fidelity. And BlackRock will all of a sudden say, hold on, don't go to Fidelity, do it with us, because we're going to offer this silo. I've seen this exist with high yield bonds. That's where I got my start in Canada 20 years ago. There was 0 high yield bond managers in Canada. Now, every single asset manager in Canada offers a high yield bond silo because it makes sense. So the same thing will happen with Bitcoin. The same thing will happen with these asset managers that are kicking and screaming against this asset class. Will have to embrace it because the clients are demanding that they offer it.
And embrace it in what way? Are we talking, Bitcoin as the world reserve currency? Are we talking about more countries adopting it? The Bitcoin standard, like specifically, what is that adoption looking like?
It'll be a process, and so let's talk asset management. That will be a diversification strategy within the asset management silos, which include pension funds, university endowments, mutual funds, ETFs, etc. But then if you take it a level higher, one of the reasons they might want to get involved is because they see countries like El Salvador doing what El Salvador did and bringing 44 other central bankers from small countries, albeit. But imagine if a country like Canada, my hometown or home country, decided to use Bitcoin to price our oil and natural gas. Well, I think it makes sense as an engineer. And once that happens, the adoption continues across the world. Now, I'm not saying that Canada is going to do this, but a smart sovereign nation that is energy resource rich, maybe Russia, for example, because they don't have a love on for the US petrodollar right now. Can you imagine if they start pricing their energy in Bitcoin? And then the asset managers say, damn, I got to get me some of that. Because I think of Bitcoin as digital energy, not digital gold. So that's why I have a problem with the inflation narrative. So much like Michael Saylor, he's a really smart engineer. I'm an okay engineer, but we still understand the law of conservation of energy. And that's why I love the Bitcoin narrative. So you see how it all is correlated? Like, you know, you have a country, and then you have the asset manager, and then you have the individual investor down here. And it's all a process. And it's, you know, it's only 13 years old. We got to be careful. Like, you know, it takes time for these things to percolate through the system.
Damn, I feel like buying some Bitcoin after this conversation. I mean, if you're looking at Canada and Canada, you know, talking about Canada pricing things in
don't go there
Bitcoin.
though, because we currently have a CEO who's not the sharpest tool in the shed. Okay, so we got to be very careful
we'll talk about that CEO in a minute. I have some questions. You have a very strong Canadian accent, so we'll get into that. But before we do actually talk about Trudeau, the man himself, I want to get your take on what is going on with Bitcoin mining right now. I personally am not fully up to date with all of that. I know that there's been a lot of controversy. You tweeted, and I'm going to get it. You wrote, if you are a Bitcoin miner that does not control your power, you are in a shit biz. So what does this mean? What's the controversy surrounding Bitcoin mining right now?
I wouldn't call it a controversy by any means. I just, you know, I tend to look at businesses as their strengths and weaknesses. And if you don't control your input costs, okay, and you don't control your output revenue because that's set by the market, that's a very difficult business. So you're like at the funnel of input. Okay? You have your energy input, you have your nozzle, and then you have your output, which could be distribution. It could be all the things that set price on the top of the funnel. You're just this function in here that if you don't control your power, you can get squeezed from both sides. And that's exactly what's happening right now in the Bitcoin mining space. So I would argue, and I'm involved in a company in Canada called Validus Power, where we own our power assets. We own 400 megawatts of natural gas-fired power plants. We host some Bitcoin miners there, but we own the power. The miner doesn't own the power. Now, over time, you just saw Duke Energy, for example, a very large 50 gigawatt company in the USA, is studying Bitcoin mining and how.
Oh, you cut out again. All right, let's hope we
stable,
hang on.
Fluctuating.
Go back.
Low.
Greg, go back a second. We missed you.
Sorry,
we missed you.
Yeah.
It's okay. Duke Energy. Go from Duke Energy. We missed you. What happened to them?
Yeah. Duke Energy just announced that they are studying Bitcoin and mining Bitcoin using their power assets. The reason is because the base load of the grid fluctuates as people turn on air conditioners when they come home from work, then they go to sleep. Well, the generators keep turning. If you don't have demand for those generators, you wear out the generators and you can collapse the grid. So it's called base load management or base load balancing. Bitcoin mining is the perfect insert into the base load management of any grid. You can increase your revenues. You can turn off the miners when you need to send the power instead of to the miners, you send it to the grid. And all of this builds a stronger infrastructure anywhere in the world. So again, the current publicly traded miners, which is the nozzle of the funnel, they have to buy their power from the utilities. Well, that's not a great business model, in my opinion. Over time, I think that'll change.
That's interesting because, I mean, I'm not super technical like that. Like my love and interest for Bitcoin comes from like a freedom standpoint. So I didn't really know or understand the difference between, you know, owning your own power and, you know, what's been going on with these companies who are publicly traded and people are buying their stocks because they thought it was a good idea. And now it's down with everything else in the market.
Well, some of them do represent some good value right now. Having been in a distressed debt and distressed asset trader my whole life, things are getting interesting. In certain companies, the breakup value of the company is higher than the implied stock price. That's when I get excited as a restructuring guy. Hey, I can buy $1 for 65 cents. I like buying $1 for 65 cents.
Yeah, no, I can imagine. So I wanted to talk about Canada, and I want to really just understand, you know, from your perspective, how have the last 2 years been? You know, I know there's been the lockdowns, you've had medicine mandates, kind of travel restrictions and stuff like that. So just from your standpoint, how's it been?
it's been disappointing as a fifth generation Canadian whose granddad fought in both world wars. Incidentally, you're in Britain. My granddad was awarded the Order of the British Empire in World War I and World War II for bravery in fighting for
Oh,
freedom.
wow.
So I'm pretty, it's near and dear to my heart in the defense of freedom. And I think Canada's in the last couple of years has definitely gone in the wrong direction. This whole response to the Freedom Convoy, in my opinion, was a spoiled little brat who is sitting in office, has lived off his daddy's credit card his whole life, and his response is typical of a little bit of a man who should not be in power. I've said this before. I'm open-minded. I don't believe Bitcoin should be a political tool. Bitcoin is apolitical, but as far as the freedom goes, the freedom concept that you say you're very close and is near and dear to your heart, I believe the same thing. And I don't. If you had asked me in the year 2019, so 3 years ago, if Canada ever would have frozen bank accounts within the next 20 years. So between the year 2019 and 2039, hey Foss, what's your thought that Canada would freeze bank accounts? I would have said maybe 20%. And guess what? 3 years later, it's 100% certain that they would do it. This is dangerous. This is not what my granddad fought for. Okay, this is not about this is a scared, young, very weak CEO in power doing very childish things, in my opinion.
You say CEO as if he's an independent, weak, scared actor. You don't think he's taking orders from somewhere closer in Europe?
I know that narrative, and I don't really want to go there. But yes, there's that possibility, isn't there? It certainly seems like you can connect the dots pretty easily. But I got to be careful here. Look, I have a lot of Canadian friends who we try and keep politics out of this. I'll just say again, a fifth generation Canadian who my ancestors came to Canada before the U.S. declared independence. Okay, just to give you an idea of the history that's there, and it's disappointing to see this happen because like freedom is what keeps people doing good stuff, in my opinion. So I like to fight for the same things that you like to fight for.
And what's the narrative on the ground? Are people happy with him? Do people feel similar to you?
I mean, the unfortunate circumstances is he won re-election with a minority government again, with less than 30% of the popular vote. But then he combined with another political party. It's sort of the Canadian parliamentary system is based on the UK, right? There's a lot of flaws in that, and nonetheless, we have to deal with our own within the constraints of our own political party. So no, 70% of the population did not vote for him, is one way of looking at it. But that being said, he's a minority government for at least 3 more years.
And how do you feel about Canada in general? Like, do you want to stay? Do you feel concerned that this could happen again? We spoke about these 10-year cycles, but looks like it could be a 5-year cycle these days. Like, what are you prepping?
I absolutely want to stay. Look, I have 3 kids who were born here. They're not going to leave in the short term. Again, 5 generations of working to build a great country. I like to think I'm not going to cut bait and run. I do get over my skis sometimes. That whole trucker convoy thing was a little pressure packed for my family. But that being said, you got to stand up for what you believe, and this is a case of I believe a concentration of power that's dangerous. That's happening globally too, though, Layah, right? It's not happening just in Canada. So
agreed.
Yeah.
Yeah, it is happening globally. It's those G7 countries, as you mentioned. And I was talking to somebody today and they asked me, what do you think about the future of Bitcoin in terms of, it being banned and things like that? And I said, not the whole world is on the same page. And you just know that from the reaction over the last 2 years.
It's the people that ask about it being banned are the people that that love government. Almost, they love this. They're too weak to stand up for their own rights. They want government to protect them. In fact, it's not those people that make countries great. Okay, what makes countries great in the case of USA and UK and Canada are the people that that fight against what's wrong. And again, I don't like to bring up the past, but my granddad was a very highly decorated veteran of both world wars. I still hear his voice in my head sometimes, like, "Hey kid, like, this is not the right way for things to go down." And I see some of that within the Bitcoin community. But look, what I need to say about the Bitcoin community, and having met you in Miami very briefly, but what I love about the Bitcoin community is they tend to be a community of givers, not takers. Okay. Everyone says, oh, they're in it in a get rich quick scheme. This is the furthest thing from a get rich quick scheme that I've ever seen. You have guys like Jeff Booth, one of the foremost thinkers, a personal friend of mine. We just came back from Madeira, a trip to Madeira, visiting, the island and the president and whatnot. This is a community of thinkers that can change the world. And, yourself and young women all over the world that are getting involved in this. I was in the city of Vancouver last night with a Bitcoin meetup in Vancouver. 200 people just came out, to hear me, espouse on my opinions on things. All I know, again, is I've made 35 years of mistakes, but I believe very confidently that Bitcoin is the best asymmetric trade opportunity I have ever seen in 35 years. And when I say I bring 35 years of mistakes, I manage those mistakes. I'm not like Peter Schiff. I don't say, oh, Bitcoin at $10, it's a horrible deal, don't ever buy Bitcoin. And then it goes to 70,000 and comes back to 20,000. He's like, see, I told you Bitcoin was a horrible deal. What a loser. Okay, I have to say that time and time again. The man is a horrible risk manager. And the fact that he continues to beat up on an asset that's superior to his love of gold is a mark of a man who's old and curmudgeonly. And I don't want to be that person. As the information changes, I will change my investment policy. So once again, manage your losers. You sell your losers and you keep your winners. Everybody else tends to do the reverse. Learn to manage risk, people. If you own 0 Bitcoin, you are taking far more risk than if you own, I'm going to throw out 0 to 5%. So own 5% of Bitcoin. And then don't focus on the price of Bitcoin every day. You still have 95% of your portfolio in other stuff that is more risky than the insurance policy that's Bitcoin. It's very hard to get that through people's heads, okay? They are human by nature. They focus on their winners, okay? And they sell their winners rather than doing the opposite. Sell your losers. Things like global bonds. When global bonds were negative yielding in Europe, that's not an asset anymore, Layah. That's a liability. Yet people still put their money in assets that provided a negative return. What kind of foolish behavior is that? God knows these are a bunch of sheep running over the cliff all at the same time.
Yeah, no, said really perfectly. I saw a quote the other day, which was, "Don't bother waking up the sheep, wake up the sleeping lions." And I like that a lot.
Yeah,
I like that a
I would
lot.
agree with that. And I'm sure you've interviewed, the likes of Michael Saylor, and perhaps you've interviewed some people that are Bitcoin haters. The beautiful thing about Bitcoin is it's an education process. I like to say it's an IQ test in risk management. Okay, it's an IQ test in risk management, and there's a lot of low IQ risk managers out there. Okay, having lived in the pits for 35 years, trust me, there is a lot of stupid low IQ money out there in the world.
Absolutely. Greg, you put that so eloquently. So I want to thank you so much for coming on. Where can people follow you and follow your work? I think Greg has frozen again at that very last second. Let's wait till he comes back. There we go. I got you.
Sorry.
I got you. No, you're okay. I was just thanking you for putting that so eloquently, so simply, and for those, who are still trying to learn and understand. Where can people follow you and, find out more about your work, stay up to date with everything that you're doing, if you're doing meetups, whatever it is?
I'm, pretty old here, so I only have one social platform. It's basically Twitter. You can follow me on at Foss, Greg Foss, so FOS.
Oh, we're gone again. All right, let's see. Let's see if we can get Greg back. Let's
Did
have a
you
look.
hear
We'll
that?
give him.
FOSS.
We hear it now. We hear it now.
FOSS GREG FOSS is my Twitter handle.
There we go.
And all I know is, see this iPhone? There's more power
Yes.
in this iPhone than put 2 men on the moon when I was alive in 1969. That technology itself allows you to hold your banking in your hand. It will change the world. Don't overthink this. It is the most beautiful financial technology that I have ever seen. Please respect that if you don't listen to people with experience in the pits, you are bound to recreate their errors. Like, the work, be smart. I'll talk to you guys in 20 years. Okay. I look forward to the next time we can talk.
Perfect. Greg, thank you so much. I'm going to let you catch your flight. I appreciate you coming on. And also, thank you to everyone for watching. Please don't forget to hit the subscribe button so you don't miss a video. Hit the like button so we can continue providing such amazing content. And also a massive thank you to BitMEX, because, of course, without them, we wouldn't be able to bring you such good content. All right. We will see you all next week. Bye-bye.
Layah Heilpern Show.